Fundamental.
Vinit. Good morning and thanks so much for tuning in. You're watching Ask BQ on BQ Prime. My name is Alex Matthew and with me is Smriti Chaudhary. We'll take you through the next half an hour or so of trade. Now, a quick reminder as we start, do send all of your questions to us on social media, on any one of the platforms that you're watching on, or in fact on the WhatsApp number that should be flashing at the bottom of your screen. Any listed stock. Now, hopefully our experts will have coverage of those stocks, but in the event that they don't, they will, of course, have an alternate suggestion to make, I'm sure. We've got Brijesh, who is retail research or with retail research at IDBI Capital. And we've got Vinit Bolinjkar, who is the head of research at Ventura Securities. Thank you so much, gentlemen, for taking the time. Pleasure speaking with you as always. The topic that we've decided to take at the start of the show in a segment that I like to call BQ Focus or Ask BQ Focus is the public sector bank pack, and specifically a couple of banks that have reported their earnings, that is Canara Bank yesterday and Punjab National Bank, both of which have posted very good set of numbers, characterized, I think, by an improvement in asset quality. Smriti, you've gone through the numbers. What stood out to you?
Well, first of all, let's look at the Nifty PSU Index, which is up about 4.6% today. First, we look at the PNB numbers, and the profit jumped fourfold, and that was because of the lower provisions. The profit was up to 1,756. Provisions fell to 3,444 crore from 4,906 crore in the previous year. Net interest income also gained 20% year on year, so overall great results. Margin at 3.24% for second quarter. Looking at Canara Banks, which also performed quite well, stable margins, higher return on assets, which was led by growth in net interest income that rose 20% from last year to 8,903 crores. NIMs for the quarter contracted 5 basis points to 3% sequentially. Net profit up 43% year on year to 3,600 crores. So that's about the numbers, but let's take a view from our guests. So Vinit, let's go to you first. What is your view on the PSU pack overall and specifically on Canara Bank and Punjab National Bank?
So PSU banks are driven by the fact that their valuations are extremely low compared to the private sector banks, and we believe that the banking business has got commoditized. The credit rating of clients has also become universal, and so there is no real competitive edge in lending. Hence, therefore, we believe that PSU banks' valuation discount, which is there, is going to sharply narrow with that of the peers. And with the asset recovery that is happening in the PSU banks, I think they're slated for a faster recovery, and hence we advocate buying PSU banks over the private sector banks. Specifically, if we talk of PNB and Can Bank, in terms of PNB, I think that the stock has done really, really well to come on par with the NPL levels or the asset quality levels at 1.5%, which is very much in line with all the other PSU banks. So the first goal of the government, to get quality under control has been achieved. Having said that, we believe that over the next couple of years, we are going to see RAA move very sharply from 0.5% to about 0.8%. So, over the next 2 years, we are going to see a growth in profits by almost 60%. So given that fact, I think that PNB's valuations, which are very benign right now, need a little bit of a leg up, and hence we believe that things will look very well for this bank. As far as Can Bank is concerned, I think the performance is very stellar, 20% top line growth. NIMs are sustained, asset quality is also sustained, and the cost to income ratio has not really galloped up, which has been the trend with the entire banking sector. Hence, we believe that this bank becomes a prime pick in the PSU space.
Just a follow up to that, and I will come to you, Brijesh, on the charts then after that. But Vinit, the loan growth, and I was looking at PNB specifically because of the size of its loan book still, the quality of the loan book has improved dramatically. as is evidenced by that move in the asset quality as a percentage of total loans. But the loan growth is not comparable with the private sector peers. Is that going to be a problem going forward? Or do you think that they've just been cautious, they've been looking at improving their book, and going forward, you could see that improvement in loan growth?
So, if you see their historical asset quality, gross loans were extremely high. Even today, as we speak, their gross loans are at about 7% and declining very rapidly. So, they do not have a lot of room to maneuver and, stress their balance sheet. And hence, I guess that the first objective, which was there to, achieve the asset quality levels which are in line with peers, consolidate for a couple of more quarters, and then push the growth is what they are talking about. Having said that, although they achieved only 5% AUM growth, they're actually guiding for 12 to 13% AUM growth. So I think the growth in numbers is going to be a next focus target over the next couple of quarters, and hence it becomes the key monitor.
All right, let's come to you, Brijesh. I'm looking at Canara Bank and PNB Bank, Punjab National Bank. Canara Bank is up about 7.6% and PNB up about 5.73%. What's your view? Is it a good time to add these two stocks in your portfolio? And if you already have these stocks, is it a good time? Should you continue holding it?
Yeah, definitely. So I think PSU Bank is one segment which is again picking up the momentum, both from the daily and throughout the week. I think PSU Bank is the one space where it's very marginal negative. So looking at this Canara Bank, I do believe this levels of 450 was a multiple resistance in the monthly time frame. So this continuation of this trend will be there, will be seen. And I even do believe today it has been the Canara Bank is up by close to 8%. Maybe today, tomorrow, day after tomorrow, if there is some cool off and Canara Bank come back to 380 levels, close to 380, 375, I'm willing to take the buy call on the Canara Bank. As I believe this 450 levels should be the highest target for the Canara Bank. Extremely bullish on Canara Bank. Coming to PNB, so PNB is also one bet, maybe not from the trading point of view, but then somebody wants to take a positional bet. The 200-day moving average in the monthly charts are somewhere near 117. So I think this should be the reasonable upside for the PNB in the short term. The definition of the short term would be 4-5 months. So I think that should be also kept on the radar. The declines in the PNB is a good opportunity. The PNB is holding to its 50-day moving average, and today there has been a gap of opening. I believe this should be viewed as a buying opportunity, and PNB and Canara Bank both can outperform in the PSU Bank is what it looks like.
Okay. So I've told my viewers that they can start asking their questions. And Vinit, the first question that we've got is on a company that has had its trading suspended, it says, due to procedural reasons. I'm hoping that you still have some knowledge of this and you can share a view, because we've got Mehek that's asking about, I believe, where is this? Yeah, Gujarat Siddhi Cements, which on the BSE I'm seeing is a very small market cap company, under 300 crore, but it's just been suspended. Do you have any view on this? If not, on the wider cements pack, perhaps you can give a view.
So, we don't track those very small cap stocks due to the limited bandwidth that we have. But, if you look at the cement space and if you see a couple of the results that have come out in terms of Ultratech and Dalmia Bharat, I believe that the good times are yet to come.
Vinit,
driven by a couple of things.
Vinit, so sorry, I've got a clarification on that. It says this is Saurashtra Cements, which is a new name because it got merged with Siddhi.
Okay. So Saurashtra Cements is definitely up on the platter for, getting bought out as an M&A play. And I believe that, it's primarily located in the Gujarat markets. And Gujarat markets are suffering from a shortage of cement. Although, large capacities are there in Gujarat, but their exports or, ex-Gujarat sales are far higher than Gujarat itself. So Gujarat is a net importing state of cement. Having said that, I believe that Saurashtra Cement should do well. And, if you take the cues from how Sanghi Industries was acquired. I think the small cement companies surviving on their own, the days are over, and these are ripe candidates for acquisition. So take over place, and hence you should be invested in this stock with that perspective and give it about 18 months.
Okay.
All right. Next up, we have a question from Chandrasekhar, who is already holding RT Industries at an average price of 473, and he plans to hold the stock for the next 6 to 12 months. So, Brijesh, let's come to you first. What's your view on the stock?
RT, the structure is negative since it has broken both the 50-day and 200-day moving average. Only the best part is it has come to this support levels of this monthly zone. So I think with this 420 SF base, if somebody wants to take a position, should hold with the stop loss of 420 levels and only probably look for some trade for a bounce. I don't think there would be a much of an upside. 490, 500 should be viewed as an exit opportunity because only if this stock, if I look at the chart, one second. This zone of 550, 570 has a very strong supply zone. So 420 should be the stop loss, and close to 500 level, I would advise to take an exit and shift the position to some other stock.
All right. Let's take a fundamental view on this. Now, from what I can see, they also announced a capex of about 3,000 crore a couple of months ago. That'll for FY24 and FY25. Is that something to watch out for?
Definitely. I think that it is one of the few companies with very, very strong cost competitiveness and forward integration, and very good plans to utilize their forward feedstock, build limited capacities and capture that additive margins that they get. So I believe that RT industry should definitely be a part of your portfolio. Having said that, we are having short-term weakness in the fundamentals, given that the global markets have broken down and things are not looking hunky-dory. But I believe that just like we have seen supply side disruptions take place globally, one is definitely at around the corner, given the Middle East crisis that is fetching up. And if that situation were to get resolved, then I think the chemical stream will quickly align to growth. And hence, I believe that any declines in this sector should be used to buy into this counter from a long-term perspective. And, you can gradually sip out here.
Okay. We've got a question coming in from Sonu. Vinit, this one's for you. On Tanla platforms, and this is a stock that is still up about 36, 35 odd % for the year so far. I'm talking about the calendar year. What is your view on the long term, though? Would you suggest a fresh entry based on the fundamentals?
I think it's a little bit overdone, in my opinion, and hence I would recommend taking profits and switching to better quality names in the IT space than that are currently available.
Would you then expand on that thought? Particularly because Vinit, we've seen the IT earnings for the second quarter, and Tech Mahindra comes to mind most recently, of course, and it was a disappointment to say the least.
So overall IT, my view is absolutely negative.
Yeah.
There are challenges in terms of the dollar depreciation, de-dollarization, and slowing down of growth globally, and too much exposure to the US market, which is, if you see their macros are not that good. But, yet the sector, yet the GDP has been growing at a blitzkrieg pace. So I think things will do well. But there, you need to be selectively choosy and picky. And you need to look at some stocks like Persistent, which is doing very well. The other stock that comes to mind is, I can look at Nazara, because I think the gaming space is of quite a lot of interest and they're getting their act together. So these are some of the stocks that I would like to recommend.
Okay, interesting. I would also like to get a technical view on Tanla platforms. Brijesh, if you can help me, because I asked Sonu what level he bought at, and he said that he's been holding 625 levels. And if Vinit says, based on the fundamentals, that some profits can be booked at this juncture and you can perhaps shift, perhaps you can give him the range that he can look at.
Alex, actually, Tanla is one stock which is now entering a stage 2. So for me, technically, it looks quite promising at this level. And eventually, there are some good amount of volume ticks which are seen in Tanla. So this suggests that somebody is buying this counter. And because of the market correcting, it is again corrected back to this 950 levels. So actually, this is a very quite good entry point. Uh, though the cost is very low, I think on a safer note, 850, which is a 200 moving average. With that base, I think one should hold the position because I don't think very soon that stock is going to break 850 levels. And gradually, I do believe this 1250, 1300 will be there on the higher side. So I have a positive view on the counter. So let's take the stop loss trade. So 850 is the base. Only if those levels are broken, then I think the structure will change. So as long as 850 levels are held, I think there's always a potential to go up. And this price, I think, should be viewed as an entry point in the Tanla.
All right. Next up, we have a stock in the aviation space, which is Interglobe Aviation. Vinit, let's come to you first, considering that DGCA came out with the winter schedule of airlines, which is 8% higher. So 8% more number of flights this winter. Is that going to be a positive for Interglobe Aviation that has a maximum market share?
Absolutely. I think, with the kind of constriction that is there because of, other players weakening, I think Tata's and Interglobe have a very, very field day for them. It's very rarely that you come across a market the size of India, which is growing so rapidly and connectivity is improving because, we are going to double the number of airports. So given that factor and the way the pricing has been controlled and, despite increasing fares, flights, occupancies are very high, I think Interglobe Aviation is a very, very good pick for the long term.
Okay, fair enough. There's an interesting question coming in from Deb, and he's asking about Sula Vineyards, which he has bought last year at levels of 310. I'm not sure, Brijesh, if you have enough data on this one, considering that it was only listed last year. So I'll let you take a look at the charts a little more closely than perhaps you do for the other stocks. And in the meanwhile, let me go across to Vinit on the fundamentals. Sula, it's an interesting play, right? What would you suggest that this particular viewer do? He's holding since levels of 310. Should he book profits?
No, I think definitely hold on to the stock. Wine consumption in India is really picking up, and Sula wines are some of the best from the Indian stables. And given these two facts, we expect volumes to grow very rapidly. And along with this, the premiumization of wine is also taking place. So you're going to have value and growth taking place for multiple years. And given that we should see earnings compounding very well over the next 3 to 5 years, and hence I think you should be holding on to the stock.
Okay. Brijesh, do you have a view on the technicals?
Yeah, so giving a target would be a bit difficult on the switch, but then I can clearly see that 490 is the level where it has taken resistance. So, but there is no damage in the counter. So there's accumulation which has been observed in the Sula. So I think once the stock scales above 490 levels, I think it will scale further higher. Just to understand that 490 will be a short-term resistance. From a trading point of view, once it scales above 490, then I think the momentum will again will pick aggressive on the positive side. So it looks positive.
Okay, next up we have a chemical stock, Fine Organic. The question is from Amar Yadav. He is holding the stock and he bought it at an average price of 3,800. The stock is currently around 4,571. Let's take a fundamental check on this. Vinit, I would also like you to talk a little bit about the chemical sector right now and what are your expectations going into the second quarter?
So you want a general view on the chemical segment, right?
Second quarter results. We're still waiting up on a couple of companies and also particularly Fine Organics.
So Fine Organics, I think there should be a little bit of weakness in this quarter. And this is in line with how the other entire chemical space is expected to perform. So let me give you a little bit of backdrop on this is that, after the Ukraine crisis, we had a fall. So that fall was primarily due to the fact that, Europe was stacked up for 1 year of inventory. Now they moved to an inventory system where they, stock up for almost only for about a quarter or a little more. So, we had seen this little pickup and stabilization of prices, but that also is now coming off because of this slowdown that is happening there. So we believe that the softness in pricing will continue. And given that fact, I think, you need to give it about 3-4 quarters before we expect pricing to start picking up. One final thing that is happening is that, the supply chains are getting more streamlined, middle persons are getting cut out, and companies are directly now focusing on India. So China is getting out of the picture very, very fast. And hence, when the recovery happens, volume growth will be very strong. And if pricing growth also picks up with that, then you're going to have a bumper of results that are going to come out 1 year down the line.
Okay, so that's very important context. Viewers, do remember to pay very close attention, and I would actually encourage you to go back and listen to this again, just to lay the context of how this particular space is going to perform, because globally, before the earnings season started, you had a lot of major players in the space that had guided to a weak sort of a year. But let's focus on the next question. We've got Rajesh Maheshwari, who's asking about L&T Finance and relatively new listing, Vinit, Geo Financial Services. Now, he's asking what the outlook for these stocks is for the short to medium term and going into the long term. Would you hold on to both of them, or would you move out? Vinit.
So Geo Financials, if you see, the promoters have been buying, right? Even 2 days ago, they bought about 2-3 crore shares from the open markets. So that is obviously giving you a sign that the promoters think that the business is having a lot of value going to be created over the next few years. And a promoter buying his own shares with the pedigree of the Reliance is telling you that, they do not play for small change. Now let's analyze what really is going to drive the business of Geo going forth, because it's a relatively new and there is nothing there to show off in this last couple of quarters. So the thing is that if you see the kind of data bank that they have is mind-boggling, and if data is new oil, then the cost of acquisition for customers is not going to be as high as the other peers have had the disadvantage of. Second thing, their monetization of this digital bank is going to be faster than the others because they are very, very digitally oriented. So given these two things and the marquee tie-ups that the company is getting in, the brands that they've got on board suggests that the growth pace should be very fast. And hence, given this promising aspects, I would want to hold on to these stocks.
All right, got it. Now, quickly, we'll take a last question, and the last one is on CDSL. Now, the stock has already been in the news because of a large number of IPOs and increased retail participation. So, a lot of expectations from the stock. Vinit, let's go to you first. Give a quick view on CDSL. Is it a good time to invest in the stock? And if you already have it, should you continue holding it?
So anytime is good to buy this stock from, having it as a part of your portfolio. Financialization of the markets has just started. It's going to explode and it's got a long decadal runway of growth ahead. So definitely buy and add more if you're holding.
Right, fair point. Gentlemen, thank you so much. Brijesh, sorry, couldn't throw questions your way at the end, but thanks so much for joining in. Both Vinit and Brijesh answering a lot of questions today. Viewers, as always, thank you so much for taking the time, and we'll be back on Monday to get all of your questions answered. In the meanwhile, stay tuned. Lots more coming up on BQ Prime.